Hello, so let's continue with Chapter 7. Now we're going to look at preparing a selling and admin expense budget. While this may seem relatively easy, it's one of the harder budgets because you make a lot of assumptions about things. Actually, all of the budgeting process involves significant assumptions. So here we have some important information to take note of. They have sales commissions that are based on 2% of sales, and it's paid in the month following the sale. Supplies expense is based on 1% of sales and is paid in the month of the sale. And the utility expense is paid in the month following the usage of electricity, gas, and water. Okay, so let's go back to our example. Sorry. So here's our assumptions. We also note that we're going to be buying equipment of $130,000 with an equipment salvage value of $10,000 and a useful life of 120 months. So we need to calculate our depreciation expense each month, which is going to be equal to our equipment cost minus our salvage value divided by our number of months, which gives us $1,000 per month as our depreciation expense. All right. So sales commission is 2% of sales, and our supplies is 1% of sales. So I'm going to put in our sales amount again from our sales budget. So you can see that we rely on our sales budget a lot. So that's why we do that first. All right, they gave us the salary expense is going to be $24,000 a month. Our sales commission is 2% of sales times 2%. Our supplies equals 1%. Okay. So that's for each month. The book tells us that our utilities expense is $1,400 a month. We calculated our depreciation expense as $1,000 a month. The book tells us that our rent expense is $3,600 and our miscellaneous is $900. All right. So our total sales and admin expense is going to be a sum of all of these. And I'm just going to copy these formulas over because it's the same every month. All right, so now we have our total sales and admin expense before interest, okay? Now we can prepare our schedule of cash payments. Sorry, I'm just gonna pretty this up a little bit. So we don't make any assumptions about when these payments are made, except for sales commission, supplies, and utilities, right? They told us some assumptions about when those payments are made. Everything else is made in the month of. So we pay out $24,000 every month. Commissions, 100% of the prior month's sales is paid. So we have nothing in September. 100% of October is going to be paid in November. 100% of November is going to be paid in December, and that means that at the end of at the end of December, we still have 4608 that needs to be paid. So this is accounts payable for sales commissions, and that goes on the balance sheet. All right. Supplies expense is paid in the month of, okay? Utilities are paid in the following months. We have zero from September. October is paid in November. November's is paid in December. Sorry, this is 1,400. And that means at the end of December, we still have 1,400 in utilities payable on balance sheet. Okay. And then rent and miscellaneous are paid in the month of. So now we have our cash payments for each month. Okay. So you'll also see that the total depreciation for the quarter is going to be accumulated depreciation on the balance sheet. And our total expenses for the quarter go on the income statement of $110,172. So if we go back to our income statement, here's our selling and admin expense of $110,172. So it gives us operating income of $64,584. All right, and finally, we're going to put together the total cash budget. All right. So it's more important to business success. The most important thing is effective cash management. So you want to make sure that you don't have cash shortages and you're not unable to pay your debts. All right. So, and you also want to know if you have excess cash to be able to pay off debts or invest. So here we learned that they bought furniture of $130,000 in October. And if it's necessary to borrow any money, the principal and interest are repaid on the last day of each month. Any money borrowed from the bank has a 12% interest rate or 1% per month, and management has a policy of maintaining an ending cash balance of at least $10,000. So that means at the end of every month, they want to have at least $10,000 on hand for emergencies. So let's go back to our spreadsheet to put together our cash budget. So first we're going to start off with our cash receipts. So at the beginning of October, we don't have any cash on hand. It's a brand new company. We're going to add our cash receipts from our sales and cash receipts budget. So if you remember, we had $40,000, $168, and $201. All right, so our total, we're going to start with just October and then go through the rest of the months. Then we have, I'm just going to copy the formula. For inventory purchases, we had cash payments. So here's our inventory payments that we forgot to sum up. So let's add those up. Oops. Not sure what happened there. All right, so let's put our payments in for inventory. Then we have payments for sales and admin. Comes from the schedule we put together. Here's our payments for sales and admin expenses. All right, for interest expense. So we're not going to have any interest expense right away because we haven't borrowed any money yet in October. And then we spent $130,000 on equipment in October. So our total budgeted payments is $247,460 for October. So now we have to calculate whether or not we have a surplus or a shortage. So you'll remember that we want to have $10,000 on hand. So to calculate our surplus or shortage, we're going to take our cash available minus our payments. And unfortunately, we have a shortage of $207,460. So that means that we're going to have to borrow some money. We're going to have to borrow at least $217,000 because we can borrow in increments of $10,000. Okay, so we need to borrow $10,000 because we want to have that on hand. Plus, we need $207,000, so we're going to round that up to $208 because $207 is not going to be enough. So that means we're going to borrow $218,000. So now we have an ending cash balance of $10,540. So you see that we have the minimum of $10,000 plus the additional $540,000. Okay? So now let's go back and figure out our beginning cash balance, which is going to be the ending that we have from October. Okay? We did borrow money, so we're going to have to calculate our interest expense. So we're going to take the amount that we have borrowed times our 1% interest rate. So our expense is going to be $2,180. We didn't buy any equipment in November, so there's our cash payment. So now we can calculate our surplus or shortage. So 178 minus 180. Now we have a shortage of $1,572,000. We can borrow in increments of $1,000. So we need at least $10,000 for our ending inventory. Plus, it's not going to be enough to borrow just $1,000. We're going to need to borrow $2,000 here. So now we've borrowed $12,000, and outstanding we have $230,000. Okay, and we're going to calculate how much cash we have ending. $10,428. That's going to be our December beginning balance. All right. Now we need to calculate our interest that we owe in December. So we're going to add up our total outstanding borrowings. We're going to multiply by 1%, which is our interest rate. Gives us $2,300 in interest expense. Okay. Now we calculate our shortage or surplus. So 212 minus 188. Yay, we finally have a surplus of $23,660. You can see that this is more than the $10,000 that we want to have on hand. So what we're going to do is we're going to pay back some of our borrowings. So we need to have $10,000 on hand. So we can actually pay back up to $13,000, which is the $23,660. And if we take out $10,000, we'll have $13,660. We can only pay back in increments of $1,000. So we're going to pay back $13,000. Sorry about this. I'm just cleaning up the formatting a little bit. And so that means that outstanding, our ending cash is going to be $10,660. All right. So now we have our cash budget. We know that this is going to be our total cash receipts on the cash flow statement. So cash receipts on cash flow. This is our total cash payments for inventory on our cash flow statement. These are total cash payments for sales and admin. This is our total cash payments for interest. And then we have our total cash payments for equipment purchases on our cash flow. This is our total borrowings on our cash flow. So this goes in the financing section. And then our ending cash balance on our balance sheet is going to be $10,660,000. This is going to be our interest expense on our income statement. All right. So now we can finish our income statement by adding our interest expense, and we're going to get our net income of $60,068. That's the end of Chapter 7. So once you've completed all of those budgets, then you can finally put together your income statement, your balance sheet, and your cash flow statement. Please email me if you have any questions. Thank you.